Now, just before we move on to some real, chart examples, I do just want to go through sort of one last theoretical example, which it's a bit more advanced. I was kind of hesitant of putting it in here just yet because I don't want to unnecessarily confuse you, specifically if you're kind of going through this for the first time. But I think this makes the most sense to put it in here now, and you can obviously watch this video as many times as you need to, and please make sure you revisit it later on in your journey as well, as it will make a lot more sense to you. But what we're about to go through is what can happen when you get quite large movements in price, which can give you those bigger swing ranges and bigger internal ranges. Because when that happens, that's when you can get sort of a lot of complex movements within there, and that's when it's very easy to get lost within structure. So instead of just talking about it with words at a blank screen, let's try and visualize this so you know exactly what I mean. So just like before, we have a nice big, just think about one time frame again. Let's keep it nice and simple. Everything I'm about to draw is just looking at one time frame. So think of the M15 if that helps you, okay? So we have a big M15 swing run to the upside, we have a nice M15 pullback, and then we have a M15 swing break of structure, okay? So swing higher high, swing higher low, swing higher high, okay? Now I'm just gonna use a different color because it might help us visualize this a little bit. So bear with me while I jump around with these colors. Cool, so we have that swing higher high. Now after a swing break of structure, what do we expect? We expect, that didn't draw, we expect a swing pullback. So try to draw this as quickly as I can. Okay, cool. So now when we have that swing break of structure, we expect a swing pullback. First little sign we look for is a bearish change of character, right? So we get the little bearish chock, right? With a little, we look at the little candlesticks like we've been doing, and then we get that bigger pullback. Now this is what we've just been looking at in this lesson, is where we get those larger internal swings, right? So we get a lower low, internal lower high, internal lower low, internal lower high, and internal lower low. Okay, cool. Now let me change my little line again. Let's make this green. Cool. So now what we just looked at again in the previous example was if we get a little bullish change of character here, yes, that could be the first sign that the swing high low may be forming, and maybe we can get in long here, right, to then target this weak swing high. But what we have to be aware of is it may have just been a bullish chock, simply just to have this orange internal pullback, right? Just to come up to here and then to continue down, right? So we would get something like that, right? That's what we've just been looking at, okay? Or more specifically, we've said that we would get a little change of character here, then we look for the pullback up into here, and then once we get that bearish chock, right, we can then target this weak low, right? And that's absolutely true. But what can happen, like I was saying, when we get really big expansive price where it's quite volatile and there's a lot of room for these big swings, is it's not always just going to have a picture perfect pullback like this, right? And then we go. Sometimes you can have movements within it and it can all get a little bit complex. So this is kind of what I'm getting at here, is if we get this bullish change of character, right, and now we know we're probably at a minimum getting an internal pullback, okay? But within that, you can get these sort of internal swings of the internal swing, if that makes sense, right? The internal structure of the internal structure. This is what I mean where it gets a bit complex. Now, as price then pulls back up towards the internal lower high, right? And we expect this internal lower high to be strong just from an internal perspective, right? Because it took out this low. And we're expecting that new internal lower high could form here and we can take out the internal lower low there, right? So that's what we said. So then if we get a bearish chock up here, right? Now we can take out this low. Now, whilst that is true, this is kind of, a bit more of an advanced thing you need to think about when we get this sort of price action, is that it's not until this low goes that really we have that solid confirmation that that larger orange low is going to go, okay? Because what can happen is we could have just bearish chocked just to have this green internal pullback, right? The internal structure of the internal structure, just to come down and mitigate this internal of the internal higher low. Right, I appreciate it's a bit of a mouthful, but hopefully when I draw it out, it'll make a bit more sense. And then if we get a bullish chock from here, now we know that it's likely this high is weak, this internal of the internal high, right? And now we can, expect this high to be run. So that's why if, we're looking at these internal swings like this, right? Internal lower high, internal lower low, and an internal lower high, but then we're expecting that to go, which is fine, right? And we get our bearish change of character. But then if suddenly, again, we'll get into this when we look at supply and demand, but let's say like we've had our bearish chock, we think that new internal lower high is formed to continue that movement. But now if price comes back up to here and we short, this can play out, but it's a lot lower probability because that bearish chock was likely just to have that internal pullback down to this low, right? Higher high, higher low, higher high. We've come in, we've chopped. This low has now failed to take out, this high has now failed to take out this low, right? So now we're trying to short from here. We're trying to short from that weak internal high of the internal structure. Okay, so this is where price can get very confusing if you're not used to this, because it's the fractal nature of price action, right? We have the larger overall swing. Then within the swing structure, we have the internal structure, okay, which would be this movement here. So that's our internal low at the moment. And this is our internal high at the moment. But then within that, we have the green structure, okay? So maybe it'll be helpful if I move this to something like that, right? And as we've had that pullback within the internal structure, we had our bearish chock up here, which is a good sign to get short. So ideally we want to get like short there, where it just gets us in initially, to then target this low, right? So now we're getting short here, right? Hopefully this isn't too confusing. Just gonna get rid of that orange line. Right, so if we can get a little chock and then getting straight away, then as price comes down to this low, we can then remove our risk, okay, as it comes into this low. Because then if it fails to break this green low, right, and then we get a bullish change of character here, right, now this high has failed to do its job. It's failed to take out this low. So now it's likely weak. Not always, but it's very likely weak. So we don't really now want to be shorting here. We want to already have been tagged in. Then we can target here, because then if it doesn't break and it starts to pull back up, right, it gives a bullish chock, we can remove our risk, okay? We'll talk about how to do this later in the course, but that's why. Whereas if you're not already in the trade, but then you leave your order on, right, and then price comes down and gives us that bullish chock, it fails to take out the green low, this green high is then weak, right? And this is where people can take a lot of losses, not understanding kind of that fractal nature of price action. So again, I appreciate it's a bit confusing. So let's just try and talk through it. Hopefully the colors kind of help a little bit. But yeah, watch this as many times as you need, okay? So we have the swing breaker structure in blue, right? This is all one time frame, don't forget. This is just what can happen when you have big movements in price, and then you can get loads of, fractal complex structure within it, okay? So we have our swing movement to the upside. We then start to have that swing pullback, okay? So I actually make this blue. This whole leg is that swing pullback, okay? Cool. So then, let's get this back to orange. So then we have those larger internal swings, right, which is this orange section. So then we're within, at the current point in time, we are within the internal high and this internal low, okay? We then got a bullish change of character to get that internal pullback, where we're expecting that internal high, right, that next lower high, to then give us another movement down, okay? But within that internal leg, we have another internal leg, right? So this green structure is the internal structure of the orange internal structure, if that makes sense. Okay, so then as price pulls back up towards this level here, right, we have a nice supply level within here, we can look to catch ideally that next internal lower high, the orange line, and we want to catch that next internal orange leg to the downside. Okay, so we look for that little change of character, which is the green structure, right? And ideally, we want to be getting tagged in straight away. So we get that little green bearish chock, and then we want to be getting in. Because then if price moves down to here, this internal low, because if we get the green structure now, at this point, the internal structure of the internal structure is bullish. So as it comes down, if this low doesn't go, and then it gives us that bullish chock, right? Now it's likely this green high is weak. And that's why we don't want to be, then trying to short against that, because it's likely this high is going to get run because this green high failed to take out the green low, okay? The green internal low. And that's where people take losses, okay? So it's only once you get that green break here, and the green internal structure then gives us that bearish IBOS. So the green structure trend then switches bearish. That's when we have much more solid confirmation that this low is going to go. Okay. So you can see how it gets a bit confusing. This typically happens when you get those much larger swings in price. And that's when you then need to have that kind of skill set to recognize the different fractal portions within each leg. Okay. So I appreciate this will be very confusing if you're going through it for the first time. So do not worry if this part is going over your head. Do not worry, come back to this. But for those of you who are a bit more advanced or have worked your way through, this is kind of something you really want to kind of try and wrap your head around now, okay? We'll go through some chart examples and hopefully it will make a bit more sense, okay? And I'll also try and put a diagram in below in the notes and try and draw it a lot neater so you can really see here what's going on. But okay, so I've just drawn up a bit of a neater example, as I appreciate, all of those drawings can get a little bit messier. So hopefully this is a little bit cleaner to visualize. But like I was just saying, we have our swing breakup structure. We expect our overall swing pullback. Remember, this is all one time frame for now, just to keep things as simple as possible, right, as we can. We then have that bearish change of character, right? So the M15, it's an M15 chock, let's say. The M15 then pulls back and it gives us those larger internal swings where we then get each break of those either internal high or low, we call an IBOS, right? And then we continue that bearish internal movement to the downside, okay? Now we get a bullish M15 change of character, and that gives us potentially that next orange pullback, right? So between the internal high and the internal low. But when you get big price movements, right, when it's quite a big range we're working within, very often then you can get the green movement, which we're seeing here, right, which is like the internal swing of the internal swings, okay? So this green movement is simply the internal pullback, right? The orange internal pullback, right? Cool. So as we come up towards this, let's call it a strong internal lower high, we expect that to hold, and we expect another lower high to form to potentially get one, another leg, another orange internal leg to the downside, right? To give us that next internal break of structure. Basically just continuing on the overall swing pullback, right? Into a deeper level down here. That's what we expect as it comes up into that strong internal high. Okay, so then what we can look for is we don't have to, but we can look for another bearish M15 chock up here to signal that this strong high is holding, right? And then we can potentially look to target this low. Okay, and what we said before is that once we get that bearish chock, this low is now ready to be targeted. Now, again, whilst that is true, the next level of understanding is if we can see that there's like kind of those larger internal swings of the internal price action, then what can often happen is price can come down to here, right? And if this low doesn't go, this internal low of the internal structure, right? And we get this scenario here where it gives us a bullish chock, at that point, that's a very good signal that this green internal of the internal high is now weak. And we can expect that this is probably going to continue, this green movement here, if we get a bullish chock, and then we're going to see that, right? And that's when we don't want to be shorting necessarily from this high here. So that's the scenario in which this continues, right? If it comes down, this low holds, and then we get the bullish change of character like we did here, right? We chock, and then we continue up. That doesn't need to be there, okay? All right, so that's the bullish scenario where we can then potentially avoid taking shorts, or we can more aggressively manage any positions, or if you're super aggressive, right, you could potentially look to buy this. Okay, I mean, it's not super aggressive because it's pro the swing trend, but this is just when you can really bring that understanding to your next level. If you want to be a more aggressive trader, if you want to get into more potential trades, or if you simply want to boost your strike rate, right, whereby if we get this bullish chock here and this low holds, then we know we don't necessarily want to short from here, right? Because it's lower probability because we assume that that high is then going to be weak. Okay, things like that, right? It's just about information. Depending on how you want to incorporate that into your own trading is going to be down to you, but it's about having that deeper understanding of price and reading what's going on and understanding, potentially why you've taken a loss or where you could have managed a trade better. Now, in terms of definitions and how we're going to label things, because I appreciate there's a lot of variables and it gets confusing when you're saying the green price action is the internal price action of the orange price action, which is the internal price action of the swing, right? But that's just the reality of trading. It can get complex, especially when you have these big ranges. So for me personally, I'm still going to classify that as an IBOS as well as this. So this would be the, if price came down and took out this low, this would be the orange IBOS essentially, right? The break of the orange internal low. And this is also an IBOS. It's just, some of you might want to call that, like I said, the internal of the internal. So that would be an IBOS. But for me, I think it's just unnecessary to do that. You guys can just be aware, or use nuance, right, of what you're referring to, or maybe come up with your own system. But that's what I'm going to be doing. So hopefully that's clear. Please watch this again as many times as you need to do. And yeah, there's not really too much I want to add at this stage to make it unnecessarily confusing, but hopefully if you can understand the concept of what's going on here and what a change of character means, but then where it is in relation to what current range you're within. So within the swing range, within the orange internal range, and then within the green, which is the internal of the internal range. And then obviously you could then, within here get swing movements like this, right? and then you get a choke, but then maybe that's just to have a pullback up to this high here and then continue down, right? And that's where price action can just get fractal and fractal and fractal. It's just within, patterns within patterns within patterns within patterns, depending on how deep you want to go. So although I said this is all one time frame, this is exactly the same way, and you could interpret these as all different time frames, right? The blue could be the 4 hour, the orange could be the M15, the green could be the M5 or the M1, right? But you can also see this all on one time frame when we get those big, larger swings in price. Okay, I'll leave that there. Hopefully that makes sense. And now I promise we will go and actually look at some real live trade examples. But the other thing I want to remind you of is when we get onto order flow as well, that will really help to visualize this even more, which is basically looking at the exact same thing we've gone through, but we can visualize it with sort of supply and demand ranges, okay? And it might just be a little bit easier to wrap your head around, but we kind of need to think about it from a market structure standpoint first. And the one caveat, well not caveat, but the one thing I'll leave this on, if you ever get confused, swing structure is king, okay? So always think about structure in terms of importance. Swing structure is the most important structure, okay? It's going to hold the most weight, right? Then the orange structure would be sort of the next level down, and then the green structure, okay? So orange is going to be stronger than green, and blue is going to be stronger than orange if you think about it that way, right? Swing structure is key. So if you're ever getting confused and you're ever getting lost and price action is getting messy, delete sort of all your analysis on all of this on a live chart, go back to, okay, where's my swing high, where's my swing low, and just know what swing range you're within, right? And then start from there, okay? If you ever get lost in this, and then just stay out of all of this. This is just a bit more advanced when you really want to drill into it and have a deeper understanding, okay? But if you're confused, just know that's your swing high or low. We want to be looking for buys that are well priced, and that's the way in which we're trying to trade, okay? You don't have to worry too much about all of this just yet, or ever. If you don't want to, right? You can keep it nice and simple.